Okay, what is up, traders? What is up, tycoons? Today's video, we're going to give y'all an update on Quant. We're going to start off looking at the weekly chart and break down a pattern that we need to be scared of. Okay, you need to be cautious of this because if this plays out, it's going to take Quant back down to 70, possibly even 40 to complete this pattern. It's a head and shoulders pattern. We have our left shoulder, we have our head, we have our right shoulder forming right here. Now, there's two sets of key levels that we're watching for support and resistance that are going to help identify if we're going to get a reversal and which way the reversal is going to go, right? We could break through these levels up here and get a reversal, or if we break through these levels, we could end up getting the overall head and shoulders pattern to play out. We've tested this neckline multiple times already. The more times you test the level, the weaker it gets. So you have to keep that in mind. We really want to stay above and keep heading upwards and really break out of this head and shoulders pattern. But for now, this is the pattern we have to be aware of. So make sure to smash the like button and subscribe to the channel. We're going to go over the fib retracement tools. We're going to go over this head and shoulders pattern, and then also the MACD and the relative strength index, how you can use all of these and combine these together to really help understand price action and navigate the battlefield that is cryptocurrency. Okay, I like to say trading is like going to battle. It's like going to war. You need to have the proper weapons and you need to know how to use those weapons. So now that we've established what we're looking at on the weekly chart when it comes to our pattern, we're going to zoom down to the daily real quick so we can get a clear picture of some of the recent price action. And you can still see we still have the same pattern forming. We're still rejecting that and, bouncing off of this trend line multiple times. But what we're going to do is we're actually going to take a look down here at our MACD. Okay. And the reason being is the MACD is very useful for spotting exit signals. Now, we're still bullish right now at the moment. Okay, our blue line is trading above this orange line. That's what we want to see, but we need to be cautious of it dropping below this orange line right here. That's going to be a MACD sell signal. If you take a look over here, we have the blue line trading above, and then it crosses below the orange line right here. That's a MACD sell signal, and we got a sharp move to the downside. Same thing happens right over here. We get a MACD sell signal, and then we get a sharp move to the downside. We went from like 170 all the way down to like 100 right here. We went from 120 down to 100 right here. So, you can never really predict how much the move is going to be, whether it's going to be a 20% move or a 50% move. But it's a very useful tool to spot those possible exit signals, right? And when to know when to get out, when there could be a sharp drop coming soon. So remember, things are still bullish right now, but we just have to be cautious of it getting below that orange line and trading downwards. That's going to be an exit signal for us. Okay. Now, another thing to look at is going to be the relative strength index, the RSI. This is going to measure the relative strength of a token at its given price. And anytime something is overbought, it's generally a good rule of thumb not to buy something when it's overbought. Overbought is going to be above this dotted line right here, which is 70. That's the technical definition of overbought. If you see here, we have this resistance level that we rejected, and we recently just rejected again. Now, we only climbed above it one time, but that was for one day. That was this candle right here. We climbed above it, and then we ended up coming way back down, and we ended up getting that MACD sell signal shortly afterwards too. So it makes sense that we're pulling back and now we're below 70, which means that we're no longer overbought. So that's a good sign, right? We don't want to stay in overbought territory because, it's harder to push higher when it's overbought. So we've already pulled back, which makes sense after looking at the RSI. And now we need to just determine what are the key levels of support and what are the key levels of resistance to break out from. So that's what we're going to do next. And we're going to do that using the Fibonacci tool, the Fib tool right over here. If you see, you can get three major support and resistance levels from it: the 61.8, the 50%, and the 38.2. The reason you look at these and the reason they're so important is because about 70% of trading is done by algo. So you never move in a straight line up and you never move in a straight line down. You move up, retrace, continue higher, or you move down, retrace, continue lower. Now, that's how you spot a trend continuation. But you can spot a reversal when you come up, retrace, and then you consolidate and break through those retracement levels. That's a reversal. Same thing to the downside, right? If you come down and then you consolidate, break through those retracement levels, that's a reversal right there. So we have our resistance levels up here for the much larger move down that we took a look at earlier. So if you take a look, we've had this large move to the downside, okay, up here from above 200. We dropped down to 100, okay, and then we've retraced. Notice how we are facing rejection at our 38.2 retracement level, which is 145.7. Now there's two levels above it, 161.48 and 177.27. These are going to be the three main levels we have to break out from to get the reversal. Okay, even if we come all the way up to 177.278 and we're not able to break past it, most likely we're going to come back and start trending back downwards. Now, the reason that I'm pretty cautious right now is because we rejected our 38.2 retracement level, and that formed this head and shoulders pattern that we're looking at. So if we're not able to get above, we can void out this head and shoulders pattern, guys. It's very possible. All we have to do is get back above 145.70 and come up towards 161 and 177. If we can do that, it won't any longer be a head and shoulders. Now, those are our price targets to the upside that we need to be aware of and be cautious of. These are dangerous areas to be going long at in between these ranges, unless you're playing smaller moves to the upside or smaller moves to the downside. But if you're looking to do longer swing trades, you want to get a breakout above, retest, and look for a continuation upwards. Or if you're looking to short, or, basically you're trying to figure out if it's a good time to buy in, or if you think we can go lower, you want to make sure that we're staying below 145.70 if you're bearish and you want to try to get in at a cheaper price. Now, there's three levels of support, okay, on a smaller scale. We just looked at the larger scale retracement levels from that big move to the downside. But we've had a very nice rally here recently. So we took our swing lows from here and we connected it up here to our swing high. So we've got this move up. If we retrace, which we've already done, look at how we're respecting the 38.2. We bounced off of it perfectly. After we made this high, we came down, we got a slight bounce, and we're currently trading right here. Okay, so we're holding our first 38.2 retracement level very well, 127.714. All right, that's a good sign. Right now, we could, get the move and continue up higher. We just have to be cautious of these levels right here. But if we start to break these levels, there's two more levels of support, 121.478 and 115.242. Those are going to be the two major support levels where if we break through these levels, most likely we're going to come down and retest this neckline of the larger head and shoulders. And if we retest this trend line, we've already tested it about 5 or 6 times. So keep in mind, the more times you test the trend line, the weaker it gets. And we've tested it many, many times. So it's going to be interesting to see, maybe we do break through these retracement levels and then we bounce off of here and we really just consolidate and void out the overall head and shoulders pattern. That would be, something good to look for. But if we break through these levels and then break through our neckline, that's where we could get that bearish possibility of us coming back down all the way to 40 or 70, because the head and shoulders is very clear right now, and it's an easy to spot pattern. And it's the pattern that I'm looking at that we need to be cautious of. Okay, so hopefully I didn't come off too bearish in this video. I am bullish on Quant. I do like it for the long term, especially, but you have to be aware of the signals, right? And this is a pattern that's could be very dangerous for a lot of people if they're unprepared. So I'm making this video so that everyone can prepare, know the major support levels and know the major resistant levels, and what to look out for on the MACD and the relative strength index. Okay, so if you enjoyed this video, smash the like button, subscribe to the channel if you're new. I do viewer requests every single week. So if you want to see your token, your cryptocurrency in the next video, all you got to do is comment down below.